Chinese commodities trader Tewoo Group has become the first Chinese state-owned company in 2 decades to default on its US dollar-denominated bonds. Let's do a three-point analysis on what this means for China. 1. Tewoo Group and its troubles. Well, Tewoo is a material circulations company. It is a bulk trader of commodities such as metals, energy, minerals and chemicals. Now, besides commodity trading, the company also has presence in other areas such as infrastructure, logistics, real estate, autos and financial services. Tewoo has been facing serious liquidity challenges in the recent months. In April, it also approached the lenders for a debt recast and sold copper at below market rates to ease the cash crunch. Now, consequently, Fitch Ratings downgraded the company by 6 notches in one go. In the last week of November, Tewoo had proposed its lenders to take a huge haircut on the bonds or accept delayed repayment at reduced coupon rates. Now, the proposal failed to clear as only 57% of the investors had accepted the proposal, and this means that the company will miss the interest payments due on 16 December, that's today, on $1.25 billion worth of bonds. Now, Tewoo's liabilities are pegged at around $36 billion. While the amount is small compared to China's overall economy, the quantum of the bad debt is mounting. 2. How deep are China's financial sector's woes? Well, Chinese corporate borrowers have defaulted on nearly $20 billion this year. The pace of defaults has picked up in recent weeks, and fears of contagion are rising as around 15 defaults have been reported since the start of November. Now, the liquidity crunch, which was earlier restricted to just private companies, has now spilled over to state-owned enterprises and even universities. In fact, the non-performing asset ratio for private Chinese companies has surged to an all-time high of 4.5% in 2019. Now, the stress on the corporate debt has also resulted in 3 regional bank failures in the recent months. 3. Is Tewoo case similar to India's IL&FS default? Well, Tewoo's case can be termed as sovereign default, and failure to repay foreign investors' money can have major repercussions on the influx of foreign capital or fresh capital to the economy. Now, the situation seems similar to IL&FS default, which actually triggered liquidity crisis in India and resulted in an intense slowdown in the country's growth rate. Now, China's situation also remains tricky. Trade war with the US is hurting businesses, and macroeconomic conditions are also deteriorating across the globe. Corporates are also finding it tough to maintain their profitability. Now, investors should remain risk-averse and also keep a close watch on such major developments in the bond and credit markets, which influence both the flows and returns of equity markets.